Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good evening, all. Ira Epstein of Linn Associates with your agriculture update for this Thursday, and we're at the 1st of March, 2018, 4:07 p.m. Central Standard Time. Crazy day. It started off today with the president saying he was not going to make any announcement about tariffs and aluminum because he had a meeting that really wasn't a scheduled meeting, as I understand it, on his dossier. And to make a long story short, he did what nobody expected. He announced that he's going to put on tariffs, larger ones than have even been in the news, and that'll happen next week. Okay, but he can walk that back because he also said, I'll probably see all of you when I sign that next week. At the same time this is going on, there's a Chinese trade delegation at the White House meeting with Wilbur Ross, Gary Cohn, and they're trying to work out trade between them. So if we get a trade war going, agriculture could be on the hit list of there if they retaliate. Remember, China buys half their needs in soybeans from the U.S. I would think the first thing they do is they'll look at Brazil possibly and make a move there. Brazil's on score for the second largest crop it's ever harvested at 112 million metric tons. The biggest crop was last year at 114 million. Just bringing this up. So beans up a little bit. And all these grains closed before the whole market reacted to the president's statement. Wheat up, and why? I've been telling you about the drought in the southern plains. It's very serious in that you've got weather markets and if corn's getting pulled with it. The risk off or on mentality. What do you think happens on a day like today when a president announces that? It causes risk off. It causes bonds to go crazy. I know you're going to say, but Ira, the gold market finished at 1305.20, and you're completely right. The problem is gold and silver close at 12:30 p.m. Central Time, but trade till 4 p.m. The latest trades were at 1318, and silver was over 1648, near 1649. What did happen today is that a number of currencies rallied against the dollar because that puts us vulnerable in a lot of areas. There's so much unknown. Don't read more into it than you have to just yet. The bill's being drawn. Does it affect everybody that we get steel and aluminum from? It would be doubtful, but you just don't know what this president's going to do. He's using it with NAFTA. You can count on it. If I'm Mexico or China, I'm looking and going, I think we should talk to the man, because if we just keep saying no to everything that they want, there will be no NAFTA. Something to think about. And I'm not saying that I agree with the president or don't. I'll go on record, I don't think trade wars work. Reagan did them, Obama did them, this president's doing them. At the outcome, at the end of it all, I don't think they work. You got to negotiate. Weekly area chart of closes. You've just gone in the beans straight on up from 947 to 1057, $1.10 for the week, up 21 cents right now. On the daily area chart of closes, another solid gain with a gain just today of 12.5 cents. So if today's gain and you're up for the week 21.25, you're up 9.25 or so, 9 cents before today. So still a good gain for everything. And look at how the market's just reaching up. These are new highs. Now, if you're a farmer, are you going to hedge any of this up here? Or are you going to look at, down the road, why May beans? That's still old crop beans from last year. But you got to be looking at your Nova and so on and doing some planning and some financial work. That is a warning to everybody. In the May meal, May soybeans, this market's up and away with the swing lines, higher lows, higher highs. You're well over the key 18-day average and 18-day average. To get down to them, you'll break the pattern of higher lows and higher highs. So if the market's going to stay bullish, I don't think they're in play, so to speak, right now. But what is in play are the black line right here, this dashed line. It's called a Bollinger Band. And Bollinger Bands are two of them, an upper band and a lower band. How they work is they offer theoretical resistance and support. But they even take a backseat to a large extent when you get a momentum indicator, it's like the slow stochastic,
that locks in a trend. I call that embedding, when it locks it in. And you can see when that happens, when the market gets both the red and the blue line to go over 80 more than 3 days in a row. Typically what happens is a market will get down to an area where it gets oversold, the traditional way of looking at it. Any reading at 20 or under is oversold, and any reading above 80 is overbought. Got that? I twist and turn that a bit. When a market starts getting both numbers under 20, and it does it for several days in a row, I say the market is locked in a trend. It comes out of that when the red line crosses back over the 20 number, and you can see right through here how the prices reacted. So because we've gone up so much recently, sometimes both the stochastic and price can fall at one time. I'm just giving you the what if when it ends. I'm not saying this is over. You get weather markets, you never know how they're going to end or how high they're going to go. It can also be how low they go if the weather's ideal. But that's not what you're getting here. You're getting a situation of stress in Argentina, which is causing U.S. beans to go up. The meal market has been the leader of all this. This market has got the embedded reading, and as you can see, it's just running to the upside. The oil is not. When you get a soybean and you crush it, you pound it down with machinery, you're either going to get its outer skin, which is the meal, or you're going to get the oil inside of it, which were used for cooking and God knows how many other things, even fuel. Yep, even fuel. It's not the part that's in demand, so you're getting an up and a down. It's the meal and the soybeans. Corn is not taking this lightly because Argentina does raise a big corn crop. And the corn is under stress there, and it's been coming up, and you've had a recent breakout to the upside. Now you have an embedded reading. I don't know how high it'll go. The odds of it tomorrow closing over the upper Bollinger Band are 3%. Typically, how you look at a Bollinger Band is that each move, only 5% of the time will it stay over or below a Bollinger Band. When you get consecutive moves, one of the things I've put as a rule of thumb on it, that each of those days is theoretically, each finger, each day, is one of those percentage points when they're in consecutive moves. Can you get beyond the fine finger on your hands? Yep, you got two hands, right? But if you go back and do your research like I have, it's rare to get to a sixth or a seventh day. Can you beat it? Of course you can beat it. When you're charting, you're playing for the norms. You're not playing for the absurd craziness. That just takes on its own meaning. In the wheat market, up and away, it finally came out of this sideways action and launched itself. I don't know where it'll end. It's weather market, so you always watch that. I can't explain the action in sugar. I was surprised at this action here. When this market was developing this pattern and pulled back, I thought it was frankly going to get back over 1363 and start an uptrend. March 5th is when you typically get a bearish signal in sugar that carries the market lower. Instead of going up, the market came down, washed itself out, down 56 points on Tuesday. Remember, today's Thursday. The market came back yesterday, made up all that, up 51 points, and today it added to it. So if you were a bull, you got hurt, a bear, you got hurt, not trending. That's what it is. It hasn't been trending. You have a higher high, actually now a higher high there, and a lower low. There hasn't been a trend. As it's coming up, if those seasonals are going to work, be careful of anything in the 1400 area. That could be an area, if it can poke up there, it might see resistance. A lot of traders look at seasonals. In the coffee, the trend has turned up. Higher lows, higher highs, momentum up at this point. Cocoa, been in an uptrend. Higher lows, higher highs, embedded reading. Market on pullbacks is a buy until it loses that reading. Cotton, a big outside day down today. Now, it needs tomorrow to know if it's going to embed. If you look at the numbers, they're both over 80 today, right? Day before, Wednesday, they were, but not the day before. Let me get to Tuesday. See that 75.91? Not there. So Wednesday, both over today. Do markets typically embed? No. So you have a market that got up to an upper Bollinger Band in an overbought condition. It did that here, sold off quickly. Got there again, selling off. So we know that traders are looking at that, And now the question is, does the market join the other grains and going higher? Does the market get nervous here? Another question. Do you get nervous on trade wars? What does it mean for our products abroad? There's so many unknowns here, it gets very unusual. What you do know is you have a lower low and a higher high in an overbought condition. If today's high is taken out, you've created what I'll call a bear trap. And that means market often runs up to the Bollinger Band. The dilemma is, or a moving average above it. Dilemma is everything's under it. So couldn't answer how high it would go. I wouldn't have a way to project it. If that's not taken out and you drop down, 79.04 is a potential support zone. In the cattle market, you fell all the way down to the lower Bollinger Band. What do you think the pros did today? The way I teach charting, and I can't tell you what all the pros did, but I can tell you what I think they did. I think that against the lower Bollinger Band at 122.30, let's call it, and the low is 122.32.5, I think they covered shorts, and the market did bounce back from there 100 points. You haven't seen a trend change, but you're also very oversold. You're oversold in the feeders. They got to the lower Bollinger Band again today and bounced. And in the hogs, you went from 71.95 all the way down today to 66.97. 3 trading days. Wow, big action. We'll be writing about that. At Linn Associates, we have our own staff of writers about the commodity markets. You know, we're one of those firms, the old school. We have our own staffs, we have people that write, and we write for commodity people. You don't get that very often. If you're like me, you're traveling the internet, you're looking all around, you're not getting that. It's easier to find all that information on financial markets than the commodity markets. We have it. If you'd like to see what our customers get and why you should be with us, it's really simple to do so. All you need to do is call our staff for a free trial. You can go to our website to sign up if you want there. You can click up here at any time if you're watching me on YouTube, or underneath us. It says click here for Ira's free information. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.